Hello everybody, welcome to the weekly series, and today we are going to be talking about the cyclical bottom target for the three most popular coins, Bitcoin, Ethereum, Solana. And let's hope that this research and this video is going to help us, because it will surely help me. All of this research I do will help me to buy back into crypto during this bear market, and this video can also help you to estimate when is likely the right time to buy back into your whatever you want to buy back into, Ethereum, Solana, or Bitcoin. I think there is enough evidence out there that all those three are going to have again some kind of a bull market in the future. So I'm pretty sure that all of you have been asking when is the right time to buy back into them. So let's start with Bitcoin. I've already analyzed Bitcoin from the Fibonacci's perspective in the previous video a couple of months ago, and very easily, very simply said, Bitcoin does love to come back to the 0.786 level. So what do I mean for those of you who still don't understand what I'm talking about? So basically, when you take a cyclical move of Bitcoin, this is 2012, 13, 14 move. When you take that move and you measure the levels of that move, 0.786 level was roughly the bottom. Actually, it did even go below that level, and that was the bottom in 2015. This is also important to remember that it basically bottomed out actually 1.5 years later, not in 2014. The bottom was on 2015, but that's not what we are going to be talking about in this video. But that's a very important point. I think people forgot this. It's a very important point for the future videos, by the way. Anyway, it did come back to 0.786, and then in the next cycle, when you measure the same method, it did come back to 0.786, and it did bottom out in 2018. It was the midterm year, although we did have a retest in 2020 during the recession. Then when you measure another cycle, 2021, it did come precisely to 0.786, and that happened during the midterm year. And when you measure the same this cycle, then where is 0.786? It's around 39,000 US dollars. So from this perspective, it's 39,000 where the bottom should be. However, we are going to make some kind of a confluence. I have prepared one more very simple method of estimating this, and that method is A to B to C to D. Again, maybe it sounds confusing, but it's very, very simple. Let me demonstrate what I mean. So now I am demonstrating this on 2022 bear market in the previous midterm year. Point A to point B to point C, I'm copying this move and I'm placing it basically to the point C. I think you cannot see that because it's way hidden in the screen. Now you can see that. So basically it was this move. Again, I have just I have drawn this move from A to B to C because this was the bottom, the first bottom we made in 2022. That was at the start of the invasion, the Ukraine invasion. And then basically I drafted A to B to C, and now I'm copying this and I'm starting at the point C. And basically I'm trying to estimate where the point D is going to be. The point D was at 13.5k, and even though we did not come exactly there, it is very close. So we can safely say that this is a very good method, and it's very simple as well. Always just keep things simple as possible. The simpler the better. The less space, the less room you have for errors. So we're going to now estimate current bear market, where we are. So I'm making sure that you can see this on the screen. A to B to C, copying that, and I put it to the point C, and the point D is estimated at $52,000. And also when it comes to the timing, it is estimating in March, the next month. So let's use the confluence of these two that we've just done. Fibonacci say that the bottom is around 39K, and this simple method says the bottom is around 52,000. And I do think that the Fibonacci is also, when you look at the Fibonacci 0.786, the last time we almost never even got there, it got front ran. I do think the 0.786 level is going to be front ran. It's just normal thing. So keeping that in mind, and also keeping that this A to B to C to D method is pointing at 52,000, I think it's very reasonable to estimate the range somewhere between 52,000 and actually above 39. So let's do maybe 44. Also, let me just very quickly switch to logarithmic, just if I can see. Yes, there is a 0.5. Now I have switched the logarithmic scale here, and therefore I also switched to the logarithmic Fibonacci levels here. And I can see that the 0.5, that is just very powerful level of the whole bull market on the logarithmic scale, is 44,000. So based on all of these three, I am going to write BTC Bear Market Bottom in 2026 and or 2027. And I'm not going to talk in this video why, but I just want to say it out there. 2007 is very important. People forgot this. People are very focused on that the bear market bottom has to happen in 2026. So I don't think that has to be the case at all. So that's why I'm saying 2027. And I will write here a range. So I would say, given how front run the 0.786 level was the last time, and it's basically continuously, if you can see this, like in the past we did go even below the 0.786, and this time not even FTX collapse made us to go much below that. So 0.786 is very popular, I would say, with whales. So I'm not going to even estimate that we will touch it. We will not touch it, in my opinion, this cycle. And therefore, I'm going to estimate maybe most bearish case, maybe 42,000 to, and let's say that the most bullish case, 52,000. So 42 to 52K, I believe this is going to be, based on the confluence of a couple of methods, this is going to be the bear market bottom. As you can see, we don't have a time to make another coin. I'm afraid I took too long, but I will use the remaining minute just to tell you something. It's very important because the sentiment is really at around the bottom. It doesn't mean that the price has to be around the bottom, but the sentiment is around the bottom, as bad as it even gets. And if you take into consideration that we had 60,000 Bitcoin literally a week ago, and when I estimating now with you, with solid technical arguments, this is all solid technical work, which is basically confluence of like 10 years of the chart history, even more. And I take the middle of the range that I've just projected, we were literally 20% away from the middle of the range I've just projected for you. So I just want to put this out there, guys, that if you are one of those guys who want to buy on the spot and hodl, I think that the next time when we get to the 60K and probably start sweeping below, you really, in my opinion, want to start buying in already.